Hey everybody. Hope we're doing well. Hope we're having a good week. Just wait for everyone to hop online first, then we can get the party started. So, yeah, I think we're all connected. Hey everyone. Hope you're having an awesome week. Just waiting for everyone to hop online. Thanks for tuning in as always. For those of you that are about to say that my face looks like it's all cut up, I went to the barber yesterday and had a shave, and it was a bit of a rough one. So, Luca, just saw your text, mate. I will give you a buzz after this if you want. Just let me know if you want me to call you after Facebook. I think it'd be good for us to chat. So, Michelle, hey, from Queensland. Hope you're doing well. Michelle's from our Blink office. She's the licensee in charge and runs my property management firm up there. Hey, Melissa, I hope you're doing well in Adelaide. Hopefully it's treating you well there. Michael, hey mate, how you doing? Cool, gonna get started into it. So another week, another scam. With it, I'm just looking at my Instagram here. Everyone joining on, hey Insta, hope you're doing well. My Instagram may run out earlier this evening because I'm using my Mac that doesn't have USB ports in it. Go figure, right? Go buy a cool MacBook, $5,000, $6,000, and you don't have USBs in it. That's what 2020 is all about. Yeah, cool. Just seeing everyone's comments. Hope you're doing well. So today I want to get straight into another scam. Firstly, let's look at what happened in the last week since we caught up. Basically, as soon as we finished this Facebook Live last week, and Instagram Live, there was some news out from the government saying that they are going to be doing sorry, the light's a little bit bright here, that they're going to do a $270 billion defense plan as soon as we hung up from the live. So basically now there's another $270 billion. So up until last week, we're looking at $440 billion worth of stimulus packages that had been made up over the course of the last 2 months. And then suddenly we threw in another $250 billion, $250 billion in stimulus packages in order to beef up our defence force. So we'll go into that a little bit later. The ATO website crashed within 10 minutes of the new financial year. So last week we were sitting, was it last Tuesday? I've got this little phone here today that I'm working from because I left my other one in the office. Yeah, so last Wednesday morning, the 1st of July, the ATO website crashed. Everyone's trying to get their $10,000 out of their super. So, it just goes to show what is happening out there in relation to people and trying to get money out from wherever they can from their super funds. So, looking at a couple of topics I want to talk about this evening is why aren't we in negative interest rates already? I did say, going back 2 years ago, that by the end of financial year 2020 we would see negative interest rates. Are we still on track for that? We will get into that. So yeah, look at the defence strategy. Uploading this thing's pretty slow. Looks like I'm some sort of gangster with a burner phone that's like the size of my pinky. Anyway, Australia is to spend $270 billion building a larger military to prepare for poorer and more dangerous world and rise of China. So why is the heading of this article? It's from the ABC, always be communism. Australia to spend $270 billion building a larger military to prepare for a poorer. Why are they saying to prepare for a poorer and more dangerous world, right? All this revolves around China, right? I don't know what's going on, right? I don't know what's going on here. I'm not professing to, but what I do know is that there's an economic clash that was occurring, that occurred from March 2018, and this has spilled over, and now we're seeing them beef up our military by $250 billion in one day. So happy in the financial year, we're going to just print off another $250 billion to print out there. So, hey Bridget's from our Blink Queensland office as well. Hopefully you guys are all awesome, and Jada, and everyone here from the Queensland office, so thanks for tuning in again this evening. Steve asked me, how did we go with that cool deal last Friday? The deal went through the week prior. I was talking about a guy that was going to come onto a Facebook Live on Friday, but we didn't end up getting him on. He's a bit crook at the moment, and he will get him on shortly, so I've got to re-tee up another time for him. So keep an eye out. Make sure, for those of you that are on Facebook, to like and follow and click all the notification icons. So the best office. Thanks, Bridget. You guys are doing really well up there, so thank you. And thanks on behalf of all the owners that we manage. Basically Scammo has come out with a new massive beefed up military plan to combat whatever China is going to throw at it. So it's a good way of printing money, good way of trickling that capital into the marketplace. Thanks for the comments, Aileen. The haircut, finally got the haircut that I was talking about on Saturday to you. With it, I also want to talk about the obvious elephant in the room, and that's not me. The elephant in the room is the New South Wales-Victoria border. That's now shut. I think there's 650 cops on standby there to stop people from coming in and out. Really, really interesting. I remember friend, mate, whatever we want to call him, of mine, Jeff Berwick, for those of you that follow the Dollar Vigilante. He always talks about he's always talking about the fact that Trump's trying to build a wall for Mexico, and he makes fun of it and says, is it the fact that Trump's trying to build a wall to keep people in, or is it trying to keep people out? With it, here we are at a point now, people being locked in their houses, locked in their state, locked in their suburb. It's communism at its finest, right? It's like China's already got their way with us and keeping us in our state. So the last time this had ever occurred was a Victoria, New South Wales border closure. It's coming last night or this evening for the first time since 1918. Basically now they're coming out and saying that this issue that's in Victoria causing a second wave and potential second lockdown and all this sort of stuff is going to cause a bigger impact to the economy. And surprise, surprise, guys, all of you guys thought that we're going to see end of JobKeeper and the sky fall in. That's a great fantasy. I'd love to see that happen. However, I told you it wasn't going to end. Right? We're going to see JobKeeper, JobSeeker, and a whole new raft of communist stimulus packages coming into play over the course of the next 6 months. They're using this as a cover-up. Just wait and see what happens, guys. Just wait and see what happens. Dwan, Birchie looking like he's about to join the military with the fresh cuts. I'm not going to join the military, guys. I'm not into, I'm about freedom and liberty, not, going out there and murdering and enslaving and taking over other people's stuff. So, and Shane from Queensland, he's liking the green phone. I may bring up one of these for you if you want to use them. They're just pretty basic phones. But so looking at this forced lockdown part 2. What is going to come from it? I just believe it's a cover up for printing more stimulus packages. Wow, they've got a couple of people that are sick. How many people have died this year from alcohol? How many people have died from getting belted? How many people have been in domestic violence? How many people have suicided? Someone's got to say it. Here they are, stopping people from running their businesses, having work, economic challenges. You think that 100 people in a whole country is enough to do all this stuff, right? This is some crazy ass stuff. But ultimately, more money, more reasons to print money, and ultimately it's going to turn into the demise of the dollar. I've got two special friends here with me today, which I haven't shown you yet, and I will get into them shortly. These are two of my friends that we'll be talking about. Absolutely worthless. If anyone needs to wipe their ass, I've got two sheets here of paper, but I want to explain to you first before anyone does that as to what they are. Takes me on to my next topic. This here is an article. The phone's very slow. It doesn't even have a SIM card in it. A national coin shortage prompts giant supermarkets to limit cash transactions. Here we are. Goes on to read, national coin shortage prompts giant supermarkets to limit cash transactions. Who would have thought, right? I went for a drive the other day, 15 hours worth of driving, and I went to check out a property that I put on my personal Instagram and Facebook and that, where I showed everyone where I bought a cool property, and it did involve me having to eat some shit food. I was only eating bite-sized pieces, so I'd get like a little hamburger at one place and some chips at another or whatever, and every single fast food joint that I went to had a sign saying no cash. Here we are in a world with no cash in 2020. Here we are in America from penlive.com. Those pennies, nickels, dimes and quarters are far more precious due to the national coin shortage brought on by the coronavirus and resulting shutdown. As a result, the giant supermarkets chain is the newest member of a growing list of retailers limiting cash transactions and/or demanding exact change. Due to the national coin shortage, select giant registers can only accept credit, debit and electronic payments at this time. Company spokesman Christopher Brand said in response to PenLive questions about the coin shortage on Friday. As the New York Post reports, Lowe's home improvement store, so like the Masters over there, they're still around, have posted signs urging shoppers to pay with exact change or use other forms of payment, as have convenience stores such as 7-Eleven, Pilot, Circle K, according to news reports and social media posts. The reason for pinching those pennies, along with the quarters, nickels and dimes, is yet another thing to blame on the coronavirus and the resulting national lockdown of businesses across the country. The Post writes the pandemic significantly disrupted the supply chain and circulation patterns for America's metal money. On one hand, the US Mint slowed production of coins to protect workers amid the crisis, the Post writes. On the other hand, coin deposits from banks also plunged these last few months, bringing the normal circulation to near standstill than what is thought. Stores have been closed. The whole system of flow had come to a stop. Federal Reserve Chairman Jerome Powell recently told House Financial Services Committee, as economy reopens, we're seeing coins begin to move around again, he added, according to the Post. But customary coinage circulation hasn't come back just yet. I said quite a while ago that... Got my phone again. So tiny. So tiny. Just, yeah. We've seen new notes come out to Australia. We've seen new notes come out the last couple of years. Why did we get new notes, right? We've got fairly new polymer notes in the last sort of 20 years. Reality is that we would never see the $100 note. They wanted to stop the $100 note, which stores half of the Australians' wealth, because apparently gangsters and crooks and all that use it. But still to this date, we've seen every smaller denomination, but we have not seen a $100 note as yet. So only time will tell, and common sense will prevail on that front. We're heading into a cashless society, folks. Heading into a cashless society. Just waiting for the next article to load. Coin shortage due to the coronavirus. What is happening and how can you help? The sign at the register at the North Alabama grocery store makes a simple request to customer: card or exact change, please. The reason, according to the sign, national coin shortage is to blame. The central banks now urging the local banks to hand back all their currency as we head into a digital currency. Is that a way to stop a bank run? Because if your money is stuck in the system, you cannot get it back out. Therefore, you can't have a bank run. Therefore, that the system goes on as we head into negative interest rates. This is all leading to somewhere, guys. So it all adds up and draws a picture. The picture may look like the Truman Show, we're being lied to on a day-to-day basis. Every day we're getting lied to. This one here is from New York Times. A penny for your thoughts could be a lot harder to find. Coins have become scarce as a virus lockdowns help keep people from emptying their coin jars in exchange for paper bills. Randy Graham, the chief executive of the First Bank of Tennessee, was surprised to learn in mid-June that the Federal Reserve would not be filling its entire order of pennies, nickels and dimes and quarters, the reason the nation's coin supply was coming up short. They're printing more money than ever before. Why aren't they printing it in bits of paper and coins and whatnot? It's just interesting to see it all unfold. I'm just seeing a few people here tag their friends and family and whatnot in here. Really appreciate when you guys do tag your friends and family. It means a lot, because then the viewership and the algorithms are banning and blocking the things that come out of my mouth to you guys. There's less and less people being able to go out to the reach. And also for those of you that aren't on Birchfeed, just make sure you go to birchfeed.com. It's free. Just go to birchfeed.com and sign up. And if you've got friends and family and whatnot, send them to the site. It's free for them as well. Start waking people up, and let's unplug those people that are stuck into the matrix. Looking at the Forbes here, this article here was sent through from Max earlier. I'm going to get back to you, Max, shortly. It says the US moves closer to a digital dollar. On the 30th of June 2020, Senate Banking Committee held a hearing on the future of digital dollar. The pressures to create a digital US dollar are mounting as China recently began testing its own digital currency, the DCEP, which will be included in popular applications like WeChat and Alipay. If anybody is wondering why the fuck FANG stocks, FAANG, Facebook, Amazon, Apple, Netflix and Google are going up, that's not a part of the article by the way, is that they now control, censor, brainwash, manipulate every thought you have, every action you have. They're delivering you content on a daily basis. It's like, they're trying to brainwash and keep you trapped. They are now going to incorporate, by the looks of things, some sort of digital currencies. If you control the currency of the population, you control the people. Mayer Rothschild said that back in like the 1900s, late 1800s. Mayer Emshel Rothschild said that. He doesn't care who is the king of the kingdom. Whoever controls the money controls the people. So here we are looking at China. They're using apps like WeChat and Alipay, basically the PayPal, the WhatsApp, the Facebook Messenger. They're using these applications in order to sort of control the currency coming out of the marketplace. Of particular concern is a widespread adoption of a digital yuan, which is a dollar, in emerging markets and in all international trade, because they are using it to hijack the petrodollar, which is the oil around the world. And that's why we've got this war going on. It's a war that we don't see, right? If you want to know what World War III looks like, we're in it right now. It's not killing people, shooting people. It's a battle of your mind and a psyop for everybody. The ideal of a digital dollar currency gained mainstream media attention last year during the Libra Congress hearings, where Facebook introduced a new type of digital unit backed by a basket of currencies and commodities. Although David Marcus insisted that Libra users would not have to put their trust in Facebook, and Libra was a decentralized currency, which it absolutely is not decentralized. It looks like it is not. If you want to go for decentralized currency, you would go for cryptocurrencies like Bitcoin and the likes. Basket currency commodities, where are we? Libra was a decentralized currency. Regulators weren't buying into it and expressed concern over the long-term threat on the traditional financial system. On July 9th, 2019, regulators requested a memorandum, however you pronounce it, on the project. In December, Libra released a new roadmap proposing several digital fiat currencies deriving the values from the US dollar, British pound, Swiss franc and others, thus creating an efficiency layer on top of the current financial system. Users will be able to access these digital currencies through a wallet instead of installed on their phone, and potentially through WhatsApp and Facebook Messenger. Surprise, surprise, guys. We spoke about this. Those of you that were in the mentoring program 2 years ago would have seen that we talked about it. Now, distribution of issues of the $1,200, I can't say that word, that C word, the C scam word with the numbers at the end of it, stimulus checks created new momentum for the digital dollar and a more efficient financial distribution machine. It is no secret that they are still wanting stimulus checks, waiting for stimulus checks, while 1.4 billion of stimulus was sent to dead people. Most recently, Congresswoman Rashida Tlaib and Pramila Jayapal introduced new stimulus proposal, $2,000 per month to residents through Automatic Boost to Communities Act, the ABC Act. Under the ABC Act, Congress would authorise the Federal Reserve to create Fed accounts or digital dollar wallet accounts, which would allow the US residents and businesses to access financial services through an app on their phone. Building on this momentum, the Senate Banking Committee continued their discussion of the digital dollar yesterday. Some highlights from the hearing include Senator Tom, I don't even want to read the rest of it, right? It's very fucking clear that our currency is being hijacked. It already was, but we're heading into a point where, sorry, there's video starting here, I don't want that playing. We're heading to a point where the currency is losing all of its value. As I said, I'm going to be talking about my two friends here very, very shortly, talking to you about what they are. So moving forward, a lot of people are asking me, look, Nathan, you said that we're going to be heading into negative interest rates at the end of financial year. It is the end of financial year and we're not at negative rates. Are we still heading there? We're at 25 basis points at the RBA. I've been sharing this chart for a very long time with people on Birch Feet. For some reason this won't move around. Oh, it is. That is the chart. That is the 30-day interbank cash rate future implied yield curve. That is where it's on the ASX website. I've been sharing that and looking at that for 12 years and getting all my information from that as to where monetary policy would be heading in the incoming future. I've been able to predict for very comfortably 8-9 years about what's about to happen with monetary policy very accurately. As of March this year, all the fundamentals went out the window, and we are in a complete fraudulent palliative care system. And if we have a look at what other charts go flat, we have a flat line here, which is the pulse rate. When people are fucking dead, that's what happens, and that is what is happening to our yield curve. If the yields go negative, we're going to see a lot more fun out in the market. So I believe we will still be heading to negative rates, and I think that will be coming sometime later this year. I can't use these charts. I'm in the dark now to be able to give you that guidance, right? We've accurately predicted from the first rate cut in 2019 in June, right, to the physical day of when it would happen, not before 90 days and not after 120, which I said in February 2019. And we saw those rate cuts, and everyone was like, wow, how do we predict them? It was using those sort of measurements. They do not work anymore. Right? We're going off a cliff with our currency. This will end up into a point of a lot of pain for a lot of people. There will be a thing where people say, who stole my money? Right? Who stole my money? Right? People are going to be walking around going, where's my savings? Where's my purchasing ability? I can't buy shit. I wish I could buy a little old, green phone that doesn't work anymore. Right? People won't be able to afford things. People will be going, who stole my money? Right? And on that note, I want to talk about my friend here. I did a little video on this today. I'm going to go into a lot more detail on it today, and I will take question on this. Right? So let's assume you were living in Hungary in 1932. You would have had this note. It is a 50 pengo. Pengo was their currency at the time. The pengo is like the dollar now, right? Yuan, pound, pennies, pence, dimes, nickels, whatever, right? This is the pengo. This is 50, let's call it $50, right? this fella $50 in 1932, right? You might go, oh wow, this is really good money here, guys. This is really, it's ancient. It's from 1930. It's like 88 years old. Imagine the poor bastards that have held this note, right? Imagine the problems that they would have had in their life, right? There's people that are on here where their grandparents would have told them about a depression or hyperinflation. I found it really interesting. About 2 years ago, people were laughing at what I was saying. People were laughing about oh, Nathan's off his head, and looking at the communities of people that have been reaching out, right? Different countries where clientele, which I've never dealt with beforehand, are coming from, right? Because they've seen their fucking 50 pengo, right, here turn into 1 milliard pengo, right? Iggy milliard pengo, right? So a milliard, if you Google what that is, the definition of a milliard, it looks like million, which it could be fair to say. A milliard was an old measurement tool. It's not used now, it's redundant, and it's 1,000 times a million, right? So that stands for $1 billion, right? When was this created? This one is from Budapest in 1946, right? So people were walking around in 1932 with $50 notes in their pocket, right? This is a $1 billion note, and that was 14 years on, right? They used to have to physically print this shit and give it to people, and thanks, James. Aileen, should I stash cash under my mattress? No, this is not good, right? If someone had have put 50 pengo in their bank account, right, they would have thought, $50, it could buy you a couple of packs of smokes, a carton of beer, or whatever the case may be. And then let's assume you put $50 in the bank account, right? Put on fixed term account for 5 years, 5% interest, whatever, and then suddenly economy shits itself. $1 billion, right? What would $1 billion? They're fucking pieces of paper, right? They do nothing, right? They're not bits of gold, they're not bits of silver, they're nothing. They're just bits of paper with dead criminals printed on them. That's all it is. Go look at any of these, I can't even say the word on here, right? I can say it in birch feed. Starts with a Z, the word, and it's not Zuckerberg, but there's certain powers that, control these things. They're all fucking dead criminals that are printed on these pieces of paper, and you're brainwashed at your 12-year indoctrination camp, i.e. school. Everyone's sending their kids there to learn how to use these money, right? But they're lied to. They're backed by nothing. So the question I ask everybody is, when you ask who stole my money, right? Question, who stole my money, right? Who prints this money? Who makes this money? Who has the ruling over it, right? Because most people, 95% of the population, 98% of the population, they wanted to laugh at me before, right? They wanted to go, fuck, right? We're going out on a party. We're going on a debt-fueled fucking orgy party, spending, right? The Ponzi scheme, the debt-based fiat Ponzi scheme, which we have now. I don't even carry money on me or currency just because I don't even care, right? Like, I understand the game that's being played. As soon as I get cash flow, right? I do have the number plates cash flow, guys. The number plates for the car cash flow, right? I don't care about having cash because it's trash, right? As Kiyosaki would say. I care about cash flow. I want this money to go in and back out, and then I want to go and purchase assets with it, right? Those assets could be shitty old phones, right? Those assets could be stacking silver, stacking gold, right? Those assets could be properties which are bringing in cash flow, so I've got more cash coming through my hands and back out, and then more coming in, right? Every week. And that's what I think cash flow is important for. This stuff is fucked, right? And people that are going to save this are going to be big time losers. The reason being is that if you had to put $50 away in 1932, it would be replaced by a $1 billion note in 14 years later. So it is reported if you go through history, what you're taught at school about, certain people, certain races, and certain, whatever, throughout history, there's stories behind it, right? There's stories, there's origins where they came from, right? And, certain people rose to power, right? Bad people, good people, whatever the case may be, they rose to power. It's reported in Germany in 1920s that you could retire on 50,000 marks. It's like 50 grand. So imagine if you had $5 million today, you could retire, right? 50,000 marks, right? In the Reichsmark government. If you look at within 4 years what had occurred, the bank closed the people's bank accounts and didn't even send them a letter. Why? Because a postage stamp was worth more than 50,000 marks, right? And the reality is that there's been, if you think that your dollars that you use in your pocket, right, are any good, right? They're okay at the moment because people believe in them, right? Because they've gone to a 12-year government indoctrination camp. There's literally going to be a fucking revolution, right? And people might think I'm off my head, and that's cool, right? Maybe I'm a little bit. But reality of it is that when everyone's shit broke, poor, fucked up, out of luck, and living in communism, what are people going to do, right? What are people going to do? So I don't want to get into conspiracy theories and, talk about there's cover-ups and whatever, but, there's differences between racial wars and whatnot. People say stuff, right? It doesn't matter if you're black, white, brown, yellow, whatever God you want to believe in, right? This is going to affect nearly every single person on earth, right? As they lose the purchasing power of their dollar, right? Their dollar will collapse and be hyperinflated away. There's no way out of this, guys. We've just seen, as I've been sharing with you guys over the last couple of months, and I said it will get worse, and it will get worse, right? They're just going to print more currency. They're going to print it into oblivion. And that is the opportunity, my friends. That is the opportunities. Matt just mentioned, I haven't gone through the messages, but Matt just mentioned gold-backed currencies coming, I reckon. I don't believe we'll ever end up back to any gold-backed currency again. People could wish for a gold-backed currency. The problem that would occur in a gold-backed currency is that it cannot be inflated, it cannot be manipulated, and people cannot benefit from it. I had George, who may be on here tonight, may not be on here. I did a podcast with him, and I think his podcast is the Right of Man, R-I-T-E of Man, so go check it out. The Right of Man, George, doing a bit of a shout out there for you, mate. He asked me at the end of the podcast, he said, Nathan, what do you think would happen to property prices if we went back to a gold-based currency like we were in the past? And I was like, that's really cool, because I never looked at it or thought about that up until that point. And I went and did some research of some charts leading up to in the early parts of the 1900s. And up until about the 1960s, when we lost our currency here in Australia and we went to the dollar standard, property prices didn't do anything. Nothing actually went up in value. It all stayed the same price until we took the currency and raped and pillaged it. And then everything started going up. And that's why I keep saying, and I will keep saying, and it's factual, and you guys will see it if you don't want to understand it, or if you don't believe it today, it will happen, and you'll be able to look back in the revision mirror and be like, I remember when we talked about that in the past. But we will end up in a point where everything just starts rising further and further, right? Go feed yourself at Macca's now, guys, right? Go feed yourself out at any fast food. Go look at the level of inflation that is sort of losing your purchasing power. You are not able to buy as much as you were able to buy before with your currency. You have to be a subservient slave to the currency system, to the government, and basically like IV dripping that into your system and into your bank account. So, very, very interesting times. Savers will be in a lot of trouble. They will not be able to buy the same amount of goods that they were yesterday. If you were this person and you had $50 saved in 1930, and then got someone that's orange, people of all different colours, right? If you had $50 saved and it got replaced by a $1 billion note, what could you buy, right? If you bought a bag of rice for $50 and they bought out a $1 billion note and the $1 billion note bought a bag of rice, this would buy you like a grain of rice, right? It lost. It's the largest hyperinflation that ever occurred in history was in Hungary in the 1930s, 1940s. We are starting to see that occur in our currencies, right? This is very different this time. We have the Federal Reserve in the US, which everything is tied to the US dollar. Everything has to be traded in that. The US dollar may lose its standard. It does have a lot more legs in it. And look at the, so I've just seen the questions come through. So it's keep the questions coming through, guys. But we're at a point now where we're going off track, right? And all the countries around the world, in 2008, 2009, when the GFC came, we saw a few bad actors, a few bad business, a few bad places go bankrupt, a few bad people get into trouble. However, here in 2020, we're now seeing countries and currencies dying, right? Countries and currencies dying. It's something you have never seen before. And, I'm excited to be alive, right? I've got smiles from ear to ear of how excited I am to see the opportunities that, present themselves. Because I believe this is a once in a generational, right? This ain't even a once in a lifetime, really. Like, it's not even generational. Generational is like 25 years, right? And we do see big recessions that occur and, depressions and countries that go under. But this is shit that your grandparents wouldn't have even seen. So very, very exciting thing. So where do I see interest rates going in the not too distant future? They can't keep printing, right? Just think about this, right? They've just printed $750 billion in 3 months. And we're about to go into another lockdown, and everyone's going to have to sit at home and be prisoners of their own house and have police come to their house, knock on their door, say, get the fuck back inside. You're going to go to jail, you're going to be charged, you're going to be fined, you're going to have your rights taken away from you, you're going to be injected with poison, whatever the case they're going to do to you, right? Do you think there's going to, they're not going to have any financial issues or ramifications? You're going to need to keep stimulating this market. And, I really had a thought that when we would see the GFD, right? This is the GFD, the global financial depression, rolling out. I said that we would see crashes that would something crash and it would spike back up. Then it would crash again, spike back up. So what we'd see in a normal 10-year cycle would be pushed into a 12 to 18-month cycle, and then it would crash again, and then we'd see another boom, and then very short, jagged cycles, because it's the way, if you stacked it on top of each other, of how it would sort of crumble. But I never thought I'd see it pan out basically to the T. But, blaming people, using people, this is like some concentration camp sort of shit that's happening at the moment, with people's rights being removed, and just, false truths that are out there, information that's being manipulated and censored. Now, I'm not here saying, it's all a conspiracy, whatever the case may be. However, you need to ask questions, right? Because this shit doesn't fucking add up, right? This is my thought. So on that note, I'm going to go to some of your questions on here. I'm going to try and keep it as a short video this evening. One other thing is that it is end of financial year. I've had a lot of people ask me questions about tax, accounting, how to structure it right and whatnot. After this, I'm going to go for a walk with my good mate Ridwan from One Path Accountants. If you do, want to speak to a new accountant this year, get things structured, get yourself set up right, feel free to reach out to my team, flick us a private message, flick us an email, and we'll do an introduction and have a bit of a chat with him to see how, the government's trying to steal from you left, right and centre. The system's trying to steal you, not just your money, but your personal freedoms as well. It's important to have someone that represents you to, try and protect you and put as much money as that back into your pocket and structure you right for your own personal finances and whatnot. So yeah, I had some questions like about capital gains tax and capital losses. I don't know in what depth of context it was, but I do have some questions that were asked that I said I was going to answer. So the difference between capital gains tax and a capital loss. If you are doing a capital gains tax, right? So say, for instance, and this is probably more of a question for Ridwan, and it's not an accountancy or tax answer for you, advice. If you are looking at making a capital gains in a financial year, let's say, for instance, you buy a property for 200 grand, you sell it for 300 grand, that is $100,000 worth of profit that you've made. You're going to have to pay capital gains tax on that $100,000 if you've held it for more than 12 months, depending on your strategy and your structure. That you could be possible for a 50% capital gains tax deduction, so you would only pay tax on half of that, and it would be charged at your normal income rate of whatever your tax rate is. It'll be taxed on top of your tax. If you have got a capital loss, so some people might have bought a property for 200 grand and sold it for 100 grand, made 100 grand loss, that there is offset not against your income, it is offset against any future sort of profits you may make on investments. So really important to get clarity around that. But if you wanted to get some more clarity on that front, feel free to reach out to my team, send us a direct message, send us an email, and we'll put you in contact with Ridwan. It is tax season, so this guy's under the pump 24/7, got appointments at his ears. That's why I'm going to walk to his office. We're going to go for a walk around the park, the business park that is, and have a chat and catch up and go from there. So on that note, I'm going to get some of your questions that you guys are asking through. So keep them coming. What have we got here? Sophia, I hope you're doing well. And hypothetically, what would the interest rate have to come down to for you to fix it? Good question. It's not just the fact of fixing the interest rate that's important. I personally am planning on fixing my interest rates somewhere around the 2%, 1.5%, maybe 1.5%, 2% would be my target range where I want to fix my interest rates. If someone was to fix their rate now, 2.99% or whatever the case may be for 12 months, 2 years, whatever, the fact is that if they fix it for 2 years, then in 12 months' time, when interest rates do go down, you could be at a position where you can't break it because you have to pay a big break cost, and you can't fix it and take advantage of that low rate that's at the bottom of that point. Obviously, no financial advice, and you need to look at your own position to take sort of a position on that. However, do take note that if you do want to get access to equity, fixing your interest rates, so you need to look at the longer term picture rather than just fixing the rates. You need to look at that asset. Are you going to keep it for the long period of time? Are you going to be trying to get equity out of it? Do you want to refinance it at some point? Have you got the right debt structure for it at this point in time? To take you through, because if you're thinking of refinancing it in 12 months or 6 months or getting some equity out, you may be limiting your chance of getting equity out of the deal. So that's just my 2 cents on that, Sophia. Hopefully you're well. Jonathan, nice clean face. You wouldn't be using Thin Lizzy by any chance? I'm not too sure what that is, but I think it's some women's thing, but not using that for fresh cuts from the barber shop. Cool, Shane there. Shane's helping out our investors here from the Gold Coast office. So if anyone is needing their properties managed, feel free to reach out to my team. We are pushing out. This is something as well. I was on the phone to Aileen on the Gold Coast on the weekend having a bit of a chat, and she mentioned to me about some tenant that had tried to put it onto us about one of our owners. Going, Corona, I can't pay the rent, etc. And she told me how, she goes, don't worry about it, we're not buying into the shit. And put a plan in place, and the tenant is agreed basically they have to pay the rent, and they've been paying the rent on time. And I asked, I just wanted to double check how we're going on the Gold Coast with rents, and she said to me very candidly that we have not negotiated or reduced even one rent for any landlord. Like, we've got thousands of properties that we manage at Blink Property, and in Queensland we have not reduced even one rent there for our owners. So we do get the best rents out there in the marketplace. So if you do have an investment property, or if you're unhappy with your agent, there's so many shit ones at the moment going, you should drop your rent by $100, the tenant can't pay, etc. It's like, well, fuck, like we've all got bills to pay, right? The best answer you can give me is to drop my rent, and because it's easy for you to do that. Obviously managing the expectations of the tenant. It's not like, we're going to get every cent out of the tenant, but we want to make sure that we're doing what's right and we're getting the highest return. So really good work there from the Blink office. Eileen just said she needs some dollars, or I'll send you $1 billion next week when I come up. So might be doing the Facebook Live from the Gold Coast next week. Monique, mass control, herd mentality, 100% right. We're in a position in time where, I remember growing up as a kid, I'm like, you can stereotypical people's thoughts and beliefs and whatnot. And now, I'm seeing people that are either like, oh no, the TV said this, right? It's like, well, you're brainwashed and you don't have a brain of your own to make your own decision. And I'm seeing people that do ask questions. And I think, especially in a time like now, ask the questions, right? Ask the questions, because people have been robbed, stolen, brainwashed, killed, murdered, sent to war, blown up, all different things over the years, right? Over hundreds of years by propaganda. And this is just a bad propaganda outlet. The media is fully controlled from the industrial military complex and the corporations out there to spruik their agendas. The central banks own them all. And that is the media for you guys. So it's they're just taking away your rights, as ladies have been saying. George Orwell, 1984, comes to mind exactly. Nathan, jacket looks like it costs as much as my duplex. Can't go wrong with 8% return, sort of $300 grand investment. Jacket, I think, is like a $200 one or something, maybe $300 one. I don't even know. I had some good ones, but I outgrew them. I put on my winter coat, so I don't even need the jacket nowadays. I've got that much warmth in my own jacket. Alex, you're looking great. Thanks, mate. Appreciate it. What will happen to the bank reserves if the rate drops to zero? Will we see some banks defaulting on their debt to the RBA and collapse? John, good question. If the banks, if the rates drop to zero at the RBA, that means new money that they are printing out costs nothing for the bank to hold. So in essence, it wouldn't be, the banks can't go broke if they're not, the banks can't go bankrupt if they aren't paying anything to the RBA. So they're doing everything to prop this system up. It'll just mean more control from the central banks around the world. They'll be owning up more of the monopoly board. They'll be having greater control of governments, of corporations, of institutions. And that's where we're heading into a very, very communist sort of regime. So very interesting point to bring up, but I don't think we're going to see the banks go under, especially in Australia as well. Like, the banks are pretty good here, as much as I like to hang shit on them. They are much better than other banks around the world. But yeah, I'm loving this market, right? Because a lot of people ask me, like, why am I so happy? I've purchased lots of different other sort of financial instruments that I own. I don't keep this deadbeat cash. I don't save this shit, right? I don't save paper, right? I don't save this stuff. I, invest in a financial instrument, so things go up. I can use them to purchase other financial instruments, which make me cash flow. With that cash flow, I then go buy more other financial instruments, and the cycle goes around. So that's my strategy. My strategy is different to other people's strategies. Other people's strategies are different to your strategies. We all need to have our own strategy. But at this point in time, as interest rates go to zero and beyond, right, we're starting to see, interesting things happen to financial instruments. So, for example, property prices lower into town, people are going to them because they're getting yields. They're not getting yields from shares. They're not getting confidence from any other sort of cash flowing or dividend or a bond, right? Who would buy a fucking bond, right? You put your $50 in, right, and you end up with $1 billion note in 10 years' time, right? If someone buys bonds, even if it had a 10% yield at the moment, it would be fucking stupid. Right? There's no financial advice, everyone. That's just me saying my thoughts. Looking at, nothing's paying a yield, right? A property with a 2%, 3% interest rate, you get returns of 7, 8, 10% yields. picking up properties below the cost of building. What we're going to see is as the hyperinflation starts to unfold and occurs over the course of the next decade, we will see cost of goods go up, cost of services go up, cost of wages go up, the cost of building to go up, the cost of cars to go up, the cost of food to go up, the cost of drinks to go up, the cost of everything will go up. So if you can buy a property that costs below construction cost today, then looking at what that would mean in the future to construct something like that, either we're going to have no construction because it'll cost too much and will be unprofitable, or we'll see that happen and the cost of new things will be more expensive and then these older ones will rise, which has happened throughout history if you go back and look at that as well. Do I need to stash cash under the mattress now? No. Try and use that cash to buy cash flowing investments. James, you're fucking funny, Nathan. I love the heart rate symbol for RVA cat flatline. I'll just say it as it is. It's dead, right? It's dead. This is a Ponzi scheme, and it's just interesting. Graham, very direct today. I try to be direct. I always try to be direct. Maybe I just got a bit more excitement and enthusiasm because I've got my two friends here with. I wonder who these criminals are on this one. She looks kind of hot. Hot chick on $1 billion note. Got some other dude here with a nice fluffy hair. Probably some criminal, caused some war crimes and got his face on a piece of paper that is worthless now. It's a big thing that we should all strive to do in life. I don't know what's going on here. There's two guys having a go at each other potentially. Ask Nathan if you can have one of those milliards to buy some new sweatpants. Not too sure. Josh, hey mate, curious on what your thoughts are on Ben Muller. Very similar strategies to yourself. He made a fucking fortune out of government housing. Are there still those opportunities here? Thanks for giving everyone your time on Tuesday, man. I've never heard of this chap Ben Muller. I can go research him. I don't know who he is to comment or on what aspect of what he does. But can you still make money out of property in 2020? Yes. I've got more investors in 2020 than any year ever, right? Any year ever before. There's more investors out of the woodworks wanting to take action in 2020. And as for people being able to do stuff, there's more people that in double-digit property portfolios this year, getting across the line of like 10, 11, and 12. More people that are going from 0 properties to 3 or 4 or 5 in their portfolio. So people are doing it out there. People are taking advantage of the opportunities that are out there, and I think educating yourself, learning about what's going on out there, looking at where your position's at and how you can best position yourself is really, really important. So if you need help on that, just reach out to my team and either book in like a discovery session where you can have a chat to one of my team and look at your position and see what options there are, or potentially even book in a map session with myself where you can spend an hour on the phone and we can look at your position and work out a strategy to help you reach your goals. So happy to do that. There's not many map sessions around available to do because I just don't have much time. I'm booked out. Josh, also have you done or plan to do any new estate development? Yes, Josh, I have done a lot of new developments beforehand. Helped a lot of investors a few years ago, which we bought distressed blocks from developers. We built properties below market value and built profit. Some of those, like I was talking to these two guys today, maybe they're on here. I remember having a chat to them last Thursday, I think it was, and him and his brother. And they were scared to, they bought the land, they're like, should we do the build? And they did the build, and now they're pulling out the equity, and, they've done really well out of that. But, is this the market now to be doing new builds? I don't believe so. Just because if the market was to double tomorrow, would you want to spend the next, 12 months, 18 months doing a build, selling it, making a profit or whatever? Then you sit back and you go, I don't have an asset. Or do you want to grab all the assets whilst they're cheap? Do you want to buy everything whilst it's $50? And then it goes up to $1 billion, and then you could sell them off, right? It's a matter of collecting assets at the moment whilst they're cheap, and then selling them when the dollar's lost its value. That is the big thing at this point in time. And whilst I've got these notes here, I'm just going to draw a bit of an interesting perspective, right? Let's just look at the number 50 and then 1 billion, right? 50 and 1 billion. And let's just play some scenarios, right? If you had a $50 note, right, in your pocket, and you go, okay, well, I get like 10 or 20 of them a week, right? You get 500, 1,000 bucks, 1,500 bucks a week. Whatever you're earning as an income, right? What sort of lifestyle do you have today, right? If you got 15, 20 of these motherfuckers, right, of $1 billion, 1 milliard, for those of you that are joining in now, is 1,000 million, 1 billion milliard, pengo. You have 20 of these in your pocket, what sort of lifestyle do you have, right? You probably have a worse lifestyle with this note than what you did with this, right? But if you picked up an asset with this, right, and paid it off with this, right, imagine having, if this is a note and this is a note, right, imagine having a 50 grand income in 2020, right, and then that same income goes to $1 million a year, right? That's not even, how can you earn $1 billion, right? If you're earning $1 million a year, like you earn one of these notes in your whole life, it's not the case, right? You have a pocket full of these things, right? But anyway, let's just assume that that you had a $50,000 income and it went to $1 million a year. On 50 grand a year, you paid 15 grand out to rent, 300 bucks a week to rent, right? The property that rents for 300 is worth 200 grand, right? You go to $1 million a year, and then, the same sort of a percentage goes to rent, and it's $300,000 a year in rent, which would be about 6 grand a week. In that scenario, 12 months worth of rent would buy that house twice over, right? So my view is that if I pick up a property today and then I get a debt attached to it, then I can pay it off with tomorrow's worthless currency. That, my friends, is the opportunity. So just be very clear, right? Watch this video again, share it to your friends, tag them, whatnot. That's the strategy just there. Peter, thoughts on Venezuela? Nice people over there. I've heard they have amazing food. I've talked to someone recently and they said, my missus is Venezuelan and, whatnot. But my thoughts on it is the country's fucked, right? Absolutely shit out of luck. They have lost their currency. Not as bad as this, but almost as bad as this. This is the worst hyperinflation in history. Bigger than Zimbabwe, bigger than anything else. But these scenarios that occur, and Venezuela, I'm getting people coming out of the woodworks from Venezuela and they're like, wow, everything you're saying, Nathan, has occurred in our country, right? And we're seeing it happening here, and we can't believe that in every country we're seeing it now. And that's the world we're entering into. I'm just going to go to Instagram for a bit and check out some messages from here, because I think we're going to end shortly on Instagram and I might lose all the questions. So, Bobby, yo, hey Nathan, hey Bobby, we'll chat shortly. It be privy. When you jump into shares this year, do you prefer growth stocks or dividends? Not asking for financial advice. I don't know at this point. It's going to be a wild ride when I do jump into the stock market. But I personally do not have any paper assets at this point in time, apart from these two little notes that I bought on eBay for $3 respectively. But yeah, I don't have paper assets at this point in time. Depending on what happens to the company, there's going to be a lot more volatility out there in the markets, I believe. Greg, yeah, Birchie, Tricks93, Laughy Face, must have said something funny. Kabir, hope you're doing well, mate. Seen you a couple of hours ago. For those of you that have mortgages, thinking of getting a mortgage, require a mortgage, have debt, whatever, it's important to get the debt structuring right. Kabir is one of my senior brokers at Zinger Finance. I run a finance firm where I help people get debt for their portfolio. Make sure you've got the right strategy. Tricks, hey Nathan, do you with no financial advice, but could you sell down a property to capitalise in the next few months, or would you hold? Personally, I'm not selling any property at this point in time. I'm trying to buy as much property as I can. It's the absolute opposite to what I would do. So a lot of people are going this way. They're thinking that they've got to run this way. I'm going that way and picking everything up. So I'm doing the opposite at this point. So hopefully it helps. If you'd like a strategy, just reach out to my office. My team are here to help everybody. 1300 367 925. Do you think there'll be the deals to have when JobKeeper and JobSeeker ends? I will share that and start a new live and answer that question and come back to Facebook. So yeah, I'll leave Facebook to load again. Tommy, hey Nath, when will the reserve go to negative interest rate, and when should we expect the Big Four to pass this on? Hope you're well, champ. Tommy, I'm doing awesome, bro. When do I think that we will see the RBA go into negative interest rates? I believe later on in 2020 we will see that. We're going to see a hell of a lot more pain on the streets. They're still saying, there's this article I've got here. I don't know if people can see me when I go to a new article like this, but I'll try. Hopefully everyone's watching still on Facebook Live. But it goes here to read, the RBA reveals July cash call. The RBA has announced its decision for the official cash rate for July, and amid speculation, the central bank has reached the lower bound. The central bank acted most as economists predicted, holding a cash rate of 0.25%, having previously stated does not believe negative rates are effective. Sarah Hunter, BIS, Oxford Economics, highlighted before the announcement the RBA has no interest in moving the cash rate. The RBA has made it clear that for at least now, they do not see negative rates as being necessarily or effective. So I think the next move will be up, but it will be quite some time into the future. While positive sentiment has increased in recent weeks as the economy and trade starts to open up, the big concern is what happens around September when the stimulus package and consumer and commercial packages potentially come to an end, namely JobKeeper, JobSeeker, rental abandonment, home loan repayment reprieve, mortgage holidays, insolvency, bankruptcy legislation, and safe harbour changes. There'll be a serious shock to the economy as people once again are forced to start paying the bills and will stop receiving the government stimulus packages. So hopefully you guys on Facebook saw that. The RBA is saying interest rates will not go negative. They are saying that at this point they may even go up, right? Are these fucking people on drugs, right? Are they that fucking messed up, or are they just telling you this shit because that's what they need to say, right? It's like the captain of the Titanic, they're fucking playing their violins as the boat's sinking and people are jumping off, dying, getting trampled on, women and children thrown off the board, right? Who are they trying to fool, right? We're not going to negative interest rates. Of course we're going to negative interest rates. So that's the shit that's coming out from the RBA, right? That's the shit that's coming out from these economists, right? Just as they were saying 18 months ago, interest rates were going up, right? So I don't know. I don't know when they're going to go negative. They will go negative. They can't go up. We've just taken out $750 billion worth of money and we've printed it, or currency and printed it, to keep the economy afloat because of some alleged fucking virus. And we're at a point now where if it goes up by 0.5%, the cost of the funding has tripled, right? What will happen to all that debt that the government just took out at 0.25% interest rate, right? It can't go up. Interest rates haven't gone up. The last time interest rates went up at the RBA was back in 2010. It's been a decade of declining monetary policy. So looking at, when will it come down? I don't know. At this point, I'm blinded by it, right? But it's obvious that you can't keep printing this money and it costing, because it's going to kill the government. It's going to kill their coffers. The government will go bankrupt. We had zero debt compared to the amount that we can print. I did say quite a while ago that we would go into the trillions, right? We're almost at $1 trillion worth of money being printed in 3 months, and we're not even in a recession. That's 3 months, it can't be a recession. But apparently Josh Frydenberg told me and everyone else that we're in a recession. Hasn't even been 3 months. So, where will this go in the future? I believe we're going down negative. When will the negative rates kick in? I reckon later in this year. Will the banks pass on negative rates? I doubt the banks will pass on negative rates if we do go negative at the RBA. Depends how far negative we go. There might be some funny bank out there that gives us, negative rates or almost zero interest rates. That would be great. But I'm just excited to be alive at the moment so we can get to see the level of stupidity out there, the level of fucking manipulation, the level of fraud that's occurring in our media, the level of the fraud that's being created in central banks, in government, in corporations. People sitting out there like, I'm Warren Buffett, I'm a good bloke. Bullshit, you're a good bloke, right? You're poisoning people. You're the devilest person I've ever met, right? As your mate, Bill Gates, right? Everyone's thinking, oh, he's a philanthropist. No, he's not. He's just channeling his money into a different account so he can build a fucking bloodline trust for his kids, right? But they never look at that. They go, oh, he's a nice old man. He drinks Coca-Cola. If you drink Coca-Cola, you'll be able to live long. Anyway, it's an interesting time that we're alive. But will we go negative? I'm confident of negative. Will the Big Four pass it on? I hope so. If they give negative interest rates, we will see. I believe the Big Four and the other banks will go down a much lower. How low will they go? Who knows, right? Did you know that back in the day, where a bank started, a bank was a goldsmith. They used to, machine gold into coins and into, dispose, like being able to be tradable objects. And when they started printing off money, these were like silver certificates, gold certificates, and these things used to be backed by metals, and they were backed by all different things. The goldsmiths and the metalsmiths, or whatever you want to call them, were in essence banks, right? And instead of having to get rolled or jumped or have your money stolen, people entrusted these goldsmiths to hold their metal and their money. And then the goldsmiths would charge a fee for them to store it, right? So in essence, for negative rates to be effect, that's probably what the market should be anyway, right? Is where you're paying for the bank to store your money, or it depends on trade, right? This is a very interesting time because no one even knows what the fucking negative interest rate would be before 2020, right? Apart from you guys, because you guys have been watching this and seen the writing on the wall for a long while. But interesting out there. Tommy asked after that one, additionally, when will the rates ever go back up? The only way the rates will go up is when they completely kill this currency. We haven't had interest rates go up for a decade, right? We haven't seen interest rates for a decade. We've had the greatest decade of all history, right? We've got the biggest booms, we've got the greatest things happening, but we couldn't get our interest rates right. We had to keep reducing those interest rates. No, you just printed so much fucking money that you needed more money to buy the same shit that you could have 10 years ago. That's what happened, right? So, get excited by this stuff. When will they go up? It's only when the currency completely dies that they'll be going back up. I don't believe they're going to go up anytime soon. There was a question that I had on Instagram before I had to restart the video for the second live. And the question is what do I think will happen after the end of JobKeeper and JobSeeker? I've talked about this a lot online, and I will keep talking about it. And I said at the start of this video, I do not believe that we will see JobKeeper or JobSeeker or any of those stimulus packages end. I think they're going to have to extend them now, just simply due to the level of manipulation out there. They cannot get rid of this stuff. So very, very interesting times. Peter, hello from Melbourne. Full lockdown tomorrow. Mate, I hope I'm sending my thoughts to you guys. Anyone from Melbourne? This is some fucked up shit that they are doing right at the moment, right? And trust me, if they say lockdown in New South Wales or lockdown in Queensland, you'll be seeing Birchie out there, and they can try and find me and whatever, but we'll do some videos out on the road and show you what's happening in the real world. People not dying, people happy, it's going to be great. But hopefully everything is going to be okay for you guys in Melbourne, because it's really fucked up what they're doing. You're under a prisoner of your own house. John, get out while you can, Peter. Well, it's probably easier to say than it is. If I paint cars for you at my panel shop, will you mentor me on weekends? Worth a shot. It's interesting, Josh. I've got some cars that need to be painted, so I do collect cars, like old ones. So yeah, maybe we could talk about something. So happy to chat about that offline if you want. Gail, hello Gail. I hope you're doing well. Look forward to coming up and seeing you ladies next week. John, do some Binvested wraps. That'd be cool. Maybe we could do some wraps of some vehicles that we've got. That'd be cool. Matt, Nathan, looking forward to the map session next week. Look forward to chatting to you next week, and humbled that you've got confidence in what we do to be able to help you with your position. So thanks for that, and look forward to chatting next week. Peter, hey mate, hope you're doing well. Sam, do you foresee banks extending mortgage holidays, or they're going to start foreclosing? They've got to keep. Think about it this way, actually. There was this thing that I said to some of my mates going back 2 years ago, and that was that I actually think we will see a point where the banks get in the shit so badly that they will have to be bailed out by the RBA. So the RBA may end up, in effect, buying the bank's balance sheets. If they do that, then they could continue this game on. If they keep mortgage holidays, right? Imagine what the dividends are going to be for these companies, right? How can we have the biggest share rally, right? The stock market booming, all these fucking experts out there, half of you are probably watching me, and I'm not mean any offense to anybody here, but just think about it, right? Because if you don't have a glitch and someone to shake you, you'd be sitting there going, fuck, like, how come I lost all my money, right? This is no financial advice, of course, in case any of those communist fucking government agencies want to watch me. But all these people that are sitting there going, oh, shares are great, they're going to go up. This is the quarter where everything collapses. That's the chapter we're at. If we're in a playbook right now, that's the chapter we're at. Everyone's going to report that they're insolvent. Everyone's going to go write that they're bankrupt. Right? The returns, they're going to be coming from shares, they're going to be nil, nada. What are they going to be reporting on? So, it is interesting. It's a checkmate position. It's checkmate. They're going to have to print so much money to avoid this catastrophe. They're going to print so much money. It's either let it die and then everybody dies, or destroy the dollar, collect as many assets as you can on the chessboard, and just fucking kick the can down the road as long as possible. And that's what they've got to do, right? Our currency is dying. It's been dying for a long while. It's going to die. It's going to fall off a cliff very shortly. And I want to say shortly. It's not going to fall off the cliff in 2020. But the actions that we're taking, right? If someone's going out partying every weekend, someone's going out and doing drugs or whatever the case might be, it's not sustainable, right? You're going to end up like one of those people in the back of a cigarette pack, right? It's the actions that are being taken today will reflect on what happens tomorrow, and we will lose the currency in this decade. Graham, I'm driving up Saturday to get over the border whilst we're free. Visit the best property opportunities right now. Awesome, mate, awesome. If you need anything, reach out to me, let me know how I can help you. Yes, hey Birchie, you're looking more suave as the weeks go by. Excited to settle on my first property in Logan. Thanks again. Awesome, mate. Congrats as well. Trying to just change my outfits. I've got different jackets. I found some the other day that still fit me whilst they can. I'm going to lose some weight. Not that I'm fat. People think I'm fat, but actually, on Instagram they can see me more, but I've just got no neck. So, Sam, Nathan, heading on a helicopter ride Saturday, Sunday around Sydney Harbour. $110 on Groupon Sydney. Flick me a PMF keen. I'd love to actually. I just think I'm going to the Gold Coast. Maybe all the guys from the Gold Coast will get angry if I don't go up, because I've been saying I'm going to come up for a long while and see everyone. So I'd love to go on it. If I don't go up, I might take you up on that offer, mate. So Josh, thanks for looking over our report. Can't wait for our journey with you and B.Invested. I think that was to Shane beforehand. Since properties might decline in value over the coming months, year, do you think it's likely banks will want bigger deposits of equity? No, they're doing everything they can to pump up this market, right? They're doing everything they can to pump up this market. They're not going to let it fall. They will kill the currency before they kill the market. So that's why they're talking about changing stamp duty, right? They need that revenue to come through. They need the revenue to come through. So they can pay themselves, right? So states and territories need to, do stuff to keep that market pumping along. So I predict that what we're going to see is stamp duty abolished. They're going to make it an annual fee, so their cash flow improves going through this time, so they've got more revenue coming through on a regular basis. I believe that we will see smaller deposits being required, meaning that more people can get into the property market. I believe that we'll see interest rates going lower, so it'll become cheaper for people to hold on to that property. That's what I see happening in the market. James, Nathan, will the rate offered on fixed and variable rates by the banks, given margin requirements, actually get to 0% or similar? So I think what James is saying, the RBA is let's say the RBA goes -2%, would the local big four banks go to 0 or -0.25% or something? It has happened in Denmark. There was an article from 2019, around August last year. It was the first bank around the world to go into negative rates where they actually pay you for taking out a mortgage. It is possible. I doubt the banks will do it, but what you've got to remember is that if they do give you money back or do charge you nothing, they're still getting paid because they're getting paid by the RBA to get that money out there to people. They've got to print money. It's got to print money. Cool. Josh just said about checking out that guy on YouTube. I'll check him out and see what he's all about. Steve, hey mate, tell us more about the 5 million square meters of land with a 6-kilometer street frontage I saw on social media. So I put a video out on the weekend. I went out to check out my newest purchase. I bought land at 8 cents a square meter. 8 cents a square meter. What is it? It's 5 million square meters, 1,250 acres, 500 hectares of land. It is in New South Wales, 400 grand purchase price. I bought it for a specific reason. I'll tell you offline what it is. It's more, I don't want to go into too much details out there for the whole world as to what I'm doing. It's for a special project of mine. No, it's not for an opium field or for a bloody pot plantation or a meth lab. It is here for a cool sort of project, which I think you're aware of, Steve, the project I've talked about in the past. And it's actually, the land is required to be on certain gradients of plane as for what I need it to do. So it needs to be, I'll show everyone what to do with it later, but we'll talk about it offline, Steve. If I haven't told you about it, I'll go into it further. But yes, I did buy 5 million square meters of land. I had a goal this year of getting my land holdings to 1 million square meters. It was just one of my random goals that I had. Like in Western Sydney, I have about 150,000 square meters of land, 150,000 square meters of land in Sydney, in the basin of Sydney, and it's all prime infill sort of site land that's going to be built upon in the course of the next next sort of decade or so. So it's really cool. Somehow I was able to find a site that was like further out of Sydney. It's not in Sydney like where we all are, and that is 8 cents per square metre, so it's pretty funny when I break it back down. Michael, hey mate, hope you're well. When do you think the American dollar will totally collapse and be 100% done? I actually don't think the US dollar is going to collapse anytime soon. It will be the other currency. So the US dollar is the base currency. They can keep printing it. However, as they contract and expand their monetary policies, other countries will be at a negative effect. So if they tighten their policy, a lot of you may fall off at this point and go like, fuck, this is too much for me. But if they're tightening their policy and strengthening their dollar, they make the Aussie dollar weaker, for example, then the cost of goods coming into Australia will cost more, meaning that we need more currency printed in order to obtain those goods, and it could actually just suffocate the other currencies out there. So it's an interesting time. I don't think that we're going to see, necessarily the US dollar collapse. I think we will see other countries' currencies die. It'll be very interesting to see how this goes on. Technically, they could just expand and contract the policies and have it as an orchestrated period where all countries sort of can bolster onto the side of it and expand and consolidate their books. But I believe that we'll see the IMF, the International Monetary Fund, come in at the end and have to bail out the whole system and give us a special drawing right. It's SDR, and something people may or may not have heard. Just remember SDR, I talked about the fact derivatives we'll hear about in the future 2 years ago when I did some crazy videos on YouTube about the GFD, Global Financial Depression. And we haven't seen the derivatives implode yet, but they will. And it's the only thing that we've got to keep together. If they let those derivatives pop, the whole market's in the shit. So special drawing rights will be the final bailout, and it'll end up being like a one world sort of currency out of that, on top of that. So interesting. But I don't think it's going to pop right away or anytime soon. How good is this, Jono? I imagine that 50k income goes to $1 million a year. It is what I would potentially see. And looking at that, if that was to occur, that means Big Mac meal might be going for like, $10, which is up to like maybe $13 or something now for a Big Mac meal. It could go up to $200, $200 for a Big Mac meal. Right? You can't buy that with this $50 note, but you could buy, at the time you could buy some good value from that, I'm sure. Matt, do you think lending conditions will ease? Serviceability seems a massive issue right now. I think we will see them make them more relaxed. And we have seen them slightly relax some serviceability, some areas, due to the fact that, like, if someone was being serviced at a 7.25% rate beforehand, in the back end of the system 2 years ago, might be getting based at like 6% or 6.5%. So it is a little bit easier, but there is all these other restrictions and caveats on lending as well. That's why it's very, very tricky. James, that is the opportunity. Well explained, Nathan. Buy assets now, period. Thanks, mate. That is the opportunity, guys. That is the opportunity. I will explain it again for those of you that missed out on it. And I'll be 1 minute on this, just be very clear. Take your friends, take your mates, take your family, take your colleagues, whatever, right? If you have this pretends $50 note, and you have this $1 billion note, which is a pengo, right? For those of you that's tuning in, Hungarian money from back in, or currency from back in the early 1900s and the 1930s and 40s. If you buy an asset today, right, and you get a debt attached to it, right? Let's say you go buy a house, and let's call this a $50 loan or a $500,000, a $5 million loan, right, that you purchase. And then in the future, right, they're printing so much money that they replace this note with this $1 billion note, right? You're basically paying off today's debt with tomorrow's dollar, which is a heavily devalued currency, and it's a wash. So I've talked a lot about debt becomes irrelevant with inflation. That's a perfect example, right? When you've got two notes here, it just puts it straight into perspective that you can pay today's debt off with tomorrow's dollar. The debt becomes the asset in that equation, right? Debt becomes the asset. You can attach an asset which gets hyperinflated away. The debt becomes worthless. You can pay it off with tomorrow's worthless currency, and you've just broken the bank. Right? Very, very exciting times. Joel, is there an inflation scenario in which property gets fucked, like stagflation, and how would you hedge against this? Cheers, mate. Loving the info. There could be, instances where property does get destroyed. There's instances where we could have things like stagflation, which mean that the economy goes sideways, right? A lot of people say, well, we could end up like Japan, where the currency's been in a stagflation for all these years. Japan is actually a very stable currency, and people trade in and out of that because they know the security. They know it's completely shit. But the thing with Japan, which is very different to many other nations, is when we're taking on currency, we're not just printing money ourselves. We are taking loans from different currencies, right? As we are taking loans from different currencies, our position is expanding. Japan's just printing more money, and that's why it's going sideways. So to get to a stagflation is very different to the actions that we're taking, because our actions as a nation and as a world and the Western society that we are taking, the actions that we are taking is going to lead to a very different outcome. Japan is a very different place. So for me, I'm diversified in lots of different assets. A lot of people, go, oh, should I go buy gold? Should I buy Bitcoin? Should I go bet my house on crypto? Or whatever the case may be. I feel there's a lot of risk around doing those things if you don't have the right structures in place and the right sort of strategy in place. For me, if things turn to shit, I can sell off crypto and pay out my debt. I can sell off precious metals, pay out debt. I can sell off other financial instruments to pay out debt. It's important to have a well-versed asset position and a well-versed portfolio. Important to look at, like people ask me at the moment, and Nathan, I'm thinking of losing my job. Should I not invest? I'm thinking of losing my job, this, that, the next thing. Reality of it is that if someone lost their job right now and they had 10 properties and they were returning $300 a week rent, that's $300 a week times 10, $3,000 a week coming into your position. Right? There's stimulus packages there to protect you, such as the mortgage holidays and whatnot. So, it's important to work out what the best strategy is for one another. None of this is obviously financial advice. I'm just here sharing my thoughts, my views, my opinions. If the market did turn to shit, I have, I've talked about a balance beforehand. There's that guy, Danny Deckchair. There's a video called Danny Deckchair. He tied his deck chair to helium balloons, which was based off a true story called Larry with his lawn chair, right? It's funny, Danny Deckchair, Larry lawn chair. This guy wanted to fly, and he got a deck chair, and he connected all these these hot air balloons to the deck chair, set them off, helium balloons, set them off, and then he went up in the sky. He had ballast, so if this guy went flying and it had too much air, he'd be taken out of, let's assume that we've got a globe of Earth, he'd be taken out of the atmosphere. So he wouldn't have the ability to come back down and rise and lower his lawn chair, throughout his travel. He didn't want to hit a power pole. He didn't want to die from hitting a building or whatever. So he hadn't strapped himself in, no seatbelt, no nothing. It's a true story. Go research it, Larry lawn chair. And in the thing when he did an article, he did an interview, and he said that he strapped big drums of water, like 44-gallon drums of water and stuff, to his lawn chair. And he had the balloons, he had the water, and then he also had a gun. And his view was to shoot out the gun from the outside, shoot the balloons to release the pressure, so he would come back down to earth. If he shot too many or something went wrong, he could let go of the water drums, and in that case, he'd be able to float up. And that's the ballast that he had. As an investor, a lot of people sometimes get there and go, oh, Nathan's got too much debt or whatever the case may be. I've also got ballast as well to navigate through choppy waters. And I think it's important for anyone building a property portfolio to look at their position, look at the risk minimization, look at the opportunities, and look at what they can do in order to, protect themselves at every step along the way, as well as being able to take maximum sort of opportunity. Need some water. Maximum opportunity. So if you guys need help on deriving that strategy, need help on working out what's best, what the next move should be, have a chat call my office, have a chat to my staff, have a chat to my team. I do have financial advisors that are a part of the business. In my head office, I've got sort of like 50 staff, 45 staff in my head office. There's no, little lines all around the office, around the desks, right? We're just, making a difference in the world and doing the right thing and hustling. So yeah, we've got a lot of staff in the head office, all here to help, help you build the right strategy to protect yourself and take advantage of the opportunities that are out there. Jonathan, how do you increase your serviceability for the banks to lend money? There's lots of different strategies on that. I help people all the time trying to push their servicing up. If you'd like to reach out to my team, I have a finance company where I manage like $1 billion dollars worth of loans, if not more. Lots and lots of loans that we manage. I'm not going to go exactly to how much I actually manage because you can tell by the size of my team it's a good amount of loans that we look after for investors. If you'd like to reach out to my team, just call the head office, send us a private message on here, and happy to get my finance strategist to be able to derive a debt accumulation strategy and a debt consolidation strategy for your position. Sometimes it is just tweaking a few things, maybe buying a property that's cash outright, it's got a high yield, 50 grand property, rent for $200 a week, $250 a week. Those extra little bits of cash flow can help you unlock portals in your portfolio. So I've seen people stuck at properties 4 and 5, and we've been able to tweak a few things, and they've been able to get up to sort of 12, 14, 15 properties in their portfolios. So reach out to my team. Happy to help out where we can. Cameron, rents have not gone up as much as property prices, a percentage of what it was 10 years ago, so the rental yield has decreased. Do you think the rental yield will continue to decrease over the next 5 to 10 years, even if property prices boom? Good question. I actually think that if we look at the amount of cranes in the sky, right, this occurred in Sydney, right, in pre-GFC. This occurred in the Gold Coast pre the crash. What we saw was when the markets crash, for example, Sydney 2 years ago, market crash, market's starting to recover. A lot of people don't realise Sydney market's starting to recover. A lot of people don't realise that there's some markets that are in a boom at this point in time. But when the markets do crash, developers stop building, right? So in the GFC, pre-GFC, it was hard to get liquidity. Developers couldn't get funding. Projects didn't happen. Cranes didn't rise in the sky. Less properties were getting built. More people were being immigrated into the country. And there was a pent-up demand. So when that occurred, when there's less building, more people coming in, pushes a pent-up demand. People that are coming in need to rent. Prices of rentals go up. Rents, it becomes cheaper to buy than it is to rent. Then the prices went up due to the fact of lower interest rates and all that sort of stuff. If we look at the Gold Coast, rents rose after the development boom. Development boom was going on when the GFC hit. It was a counter-cyclical market, so different to Sydney. And we've seen a slow rise due to the fact that we've got a shortage of buildings that are occurring. So it all comes down to the lack of supply and demand in the market. At this point in time, there was a market like this. My first job ever, I thought, I want to be awesome, I want to be the sickest investor ever. I want to become a real estate agent. And my first job was putting up rental signs and showing rental properties in Western Sydney back in 2001, 2002. And it was the shittest job in the world. But at that point, the market was destroyed. Like, properties would sit vacant for 6 months. Brand new properties wouldn't find a tenant. You have to give 2 weeks free rent and stuff like that. And then after about 3 years, 4 years, the market took off, and we saw the rental boom that occurred over the course of the following sort of 5 years. When the GFC occurred, rents took off. I think we're sort of at that point at the moment where we will see rents kick off in certain areas after. I just had a notification come up on my phone that the battery's dying, so you've got to wrap up soon. But I think we will see yields rise. The yields won't rise up to where they were. However, the rents will rise based on the figures of what you've got today. So if you look at a property which you bought for $500,000, it might rent for $500 a week, just hypothetically, and the property goes to $1 million, and then the rent goes from $500 to $800, it's still not going up to the right percentage amount, but the $800 on top of the $500 is getting a great return. At that point, like, not saying that's a great return, because it's not, but the yields will rise. So if you're buying a property today for 200 grand and it rents for 300 bucks a week, and it's in a capital city, the rent goes from 300 to 450, and the property goes from 200 grand to 400 grand. Suddenly the yield at 450 bucks a week on 400 grand is crap. However, the rent of 450 on the 200 grand is very strong. So that's what we need to bear in mind on that front. Sam, top 3 books you recommend? No particular topics. I don't even read. I can't read a book. I don't have the attention span to do so. I do watch a lot of videos, a lot of YouTube videos and different sort of authors and publishers out there. I do post them on Birchfeed, so all the stuff that I consume in content on a day-to-day basis, unless it's what's going on in my head, I do post maybe like 20% of that if I feel it's relevant to Birchfeed. So that's why I think it's important for everybody. That's why I think it's very important for people to join up to Birchfeed and see what's going on there. Frank, what do you see Logan doing in the next 12 months? Interesting. I think that whole southeast Queensland corridor, be it from Tweed Heads to Sunshine Coast out west a little bit, not going too far west, just basically that one little strip up the coast, will be a very nice corridor. We've been buying out in that corridor, in the southeast Queensland corridor, way before people thought it was good. I buy things when they're crap. Everybody hates them, everyone spits on them, everyone pisses on them, everyone laughs at it, and then going in there, as I always say, go in there when everybody's running to the door, pick up all the wallets, rings and watches off the floor, and then people come back and they're like, I want to buy that, right? So I think that at that market there's still a few opportunities in there, but it is getting pretty heated at the moment. Josh, do you need anyone to hold your bags, mate, on your trip to Queensland next week? Thanks, mate. No, I actually don't fly. I just drive. I'm scared of aeroplanes. 18.5 mil worth of debt, perfectly fine. Catch an aeroplane, I don't do it. So yeah. Hello, Westcott Cairns, my dream. We've got here a couple of people have a bit of banter, which is cool. Graham, when you refer to the US dollar suffocating other currencies, is this the dollar milkshake theory? I still haven't looked into it that much. I'm not too familiar with it. I've heard bits and pieces about dollar milkshake theory, but I wouldn't like to say that's what I'm referring to because I haven't looked into it that deeply. I know I probably should because everyone keeps talking about this dollar milkshake theory, but I don't know whether to agree on it or not because I haven't looked at it yet. So, do you prefer buy and hold properties in your personal name, company names, or a trust, or a mixture? I prefer to hold things in a mixture. Everybody's position is different. Some people should be buying under their personal name. A lot of investors, a lot of the most successful investors that I see out there hold their properties under their personal names. But everybody's position is different. And if someone's thinking about putting under a trust or under their personal name or undecided, feel free to hit up the team and I'll get Ridwan, have a chat to you about it, just a 15-minute chat, and just give you a bit of feedback on that front. Mahesh, 10 properties, chasing the dream. We will get you there, brother. We will get you there. You're on the right track, and excited and humbled to be of stewardess to help you get there. So, Matt, thanks for taking the time to answer all the questions. Greatly appreciated. Thanks, mate. Hope you're doing well. We've got to catch up soon, mate. We've got to catch up. It's been way too long. What deposit do you use when borrowing, and do you interest? So Chris asked here, what deposit do you like? Do you use when borrowing, and do you interest only all your debt or pay principal as well? So when buying properties, I'm a big fan of doing 20% deposits on purchases. I love going back and pulling out as much equity as I can, which is great, because then I can use that to go and purchase subsequent properties and have a nice buffer in place in case something goes wrong. You can offload the asset and you're minimising risk along the way. To start off with, I go interest only personally. And then after 5 years or so, they go principal and interest. Once the cash flow of the rent has increased, so if the rent's $300 today, it's 320, 340, 350, 360, 370, and then principal repayments start coming out at $50 a week or so, then all the excess rent is starting to pay down that mortgage. So I do have a consolidation strategy, but especially at a rate of 0% interest rates or 0% interest rate policy, or 2%, 3% at the banks, and borrowing that at retail rate level, I believe I can do a better return than paying off interest at 3%. So that's what I've got to look at. It's personal for everyone. It's not financial advice. I think it's important when considering if you're going to be paying off your mortgage, right? Think about it as an investment. If you had $100,000 and you wanted to put it into your mortgage today, it might sound like a great idea or whatever the case may be, but really you're taking $100,000 of money, right? You're taking all this hard-earned energy, right, and paying it off to save yourself 3%. You're telling me that you can't get a better return than 3%? And then in the future, this is worthless. You could pick up as much asset as you can today, right, at this level, and pay it off with this $1 billion note, right? I think you can do better things with your money, and that's why I, like doing interest only. But everybody's position is different. No financial advice. Can help you with financial advice if you want to reach out to the with the team. Frank, on JobKeeper, can we do anything to borrow? Have a 6-figure deposit but can't borrow. Who's to say you can't borrow on JobKeeper, right? I've got lots of people that are borrowing on JobKeeper. Doesn't mean you can't borrow to buy properties if you're on JobKeeper. So if you're on JobKeeper and you think you can't buy property, reach out to my team. We'll be able to help you out. Maybe help you out. Like, there's not making any promises here. But people on JobKeeper can purchase properties and build their portfolio. As a quick elevator pitch, can you quickly explain what the dollar dying will mean for debt? Good question, Vince. I'm going to answer this one on Facebook, then I'm going to go to Instagram, and I'm going to wrap up for the evening. So if anyone's got any further questions, reach out to my team, send a message, feel free to call the team and have a chat with the team as well. My team will do a 15-minute discovery session if you guys want to see what options you've got to get through this time. So if you do want to speak to someone, call the office, 1300 367 925, and see what we can do for your position. So Vince, the dollar dying will mean for debt is that, I explained this beforehand, but debt becomes irrelevant with inflation. It will be very bad for people that are saving money, because if you've got that let's call this $50, right? Just for the fun of it, because people know what $50 is and whatnot. Let's call this a $1 billion. Let's call it $1 million just for the fun of it, right? Just call it $1 million. It's $1 billion, but let's call it $1 million. If you had $50, how long would it take to save it up, right? What sort of energy? Let's say that someone's getting paid $50 an hour, right? Which is still quite good money. Some people earn more, some people earn less. And then let's assume that in 10 years' time, people are earning $1 million or $1 billion worth of income per hour, right? If you've got this debt, you could take this debt today, just wait a period of 10 years and pay off that debt with the collapsed currency that we've got. It's just an interesting and a fascinating time that we live in. Debt becomes irrelevant with inflation. It's never that the property goes up in value. There's occasional properties go up in value, but it's the money that you're buying it with, which is losing its purchasing power, and you need more of that money in order to buy the same asset tomorrow. So think about that. The whole paradigm changes. Over to Insta, what's going on? What do we have here? Shane, they also said they won't go below 1%. They just talk shit. Exactly, right? The RBA, I know exactly who we're talking about here, even though I haven't been on Insta for a half hour or so. The RBA are talking shit. It's the media, it's propaganda, it's all lies. You have a wool pulled over your eyes. Seek questions, learn knowledge, and look for answers. And that's the market we're in, right? The RBA said that they wouldn't reduce rates below 1%. They reduced them very quickly, below 1%. They're saying that interest rates will not go negative. We are going to go negative on the interest rates. My thoughts is in the second half of 2020, but it's exciting time to be alive. All the central banks will go bust and IMF will bail everyone out. That's basically exactly what I said beforehand. The IMF will bail everyone out. Beforehand it was the banks went bust, the central banks bailed them out. This time it'll be the central banks that go bust, and then the IMF will have to bail them out. So the RBA will probably go bankrupt, and then they'll have to call in the IMF, and then they'll have to do special drawing rights, create a new currency, and there'll be a point where I will want to pay out debts, and that is not today. I want to accumulate as much as I can and pick up as much asset as I can with the worthless currency and watch it die. IMF will hold reserve currency, one world currency, exactly, right? It's the mark of the beast, right? It's in biblical proportions, and I said this would be biblical proportions. On that note, no more questions from Instagram. No more questions from Facebook. I just wanted to thank everybody again for tuning in, checking us out, listening to me and having me as a part of your evening on Tuesday night. If I could ask of a favour, I'm trying to grow the Birchfeed subscribers. It's free. If you're not on there, make sure you go to birchfeed.com, birchfeed.com. Join up, it's free. Get some information. If you're liking what you're seeing on there, please share it with your friends and family. Get them on board. Post it on your social media. Post it on Facebook, Instagram. Get your communities involved. I want to see if we can get ourselves to 10,000 people by the end of the year. You can't fucking censor me on my own channel in Birchfeed, right? So some of these videos may be censored in the future. You may start seeing them get removed, may start seeing things go wrong. So with it, appreciate that. Just seeing here, Luke saying he's getting his subs. Appreciate that. On the final note, if you guys need help with anything, whether it be from financing, structuring, planning, accumulation, management, legal, structuring, super fund planning, where to turn to next, reach out to my office. I've got all the experts here. I've got like 100 people in my team. Got a very large team of people that can help you from all different walks of life and areas on your investing journey. And I'll keep bringing the information to you as I see it fed. I'll put a lot more into Birchfeed. So thanks guys, I appreciate tuning in. And on that note, I'll see you next Tuesday. Bye for now. Where's the end one? There's that. Bye for now, guys. See ya.